Alright, another learning objective for Chapter 1. And this is dealing with the standard deduction yet again. We're back. Loving the standard deduction. So, this time they've actually corrected the year. The 2020 standard deduction amount are present below. And again, as a refresh, single gets $12,400, marrying filing jointly $24,800, married filing separate, basically half, $12,400, head of household gets $18,650, and then if you are a qualified widow or widower, you get the $24,800 for those 2 years. Alright, so again, refresh. Awesome. Now, again, we have additional amounts for old age and blindness. So, additional amounts for blindness are over age 65. We get that $1,650 for unmarried taxpayers and $1,300 for married taxpayers and qualified widows or widowers. Again, you can have both of these. Well, I mean, basically, both blindness and age 65. You will basically times this by 2. Okay? Now, individuals that are not eligible for standard deduction. These are taxpayers that cannot use it and must itemize if 1. You are married and filed separate and the spouse itemizes. Again, you are stuck to do exactly the same thing as your spouse. So if one itemized, the other one has to. Both use standard. Both have to use standard. If you happen to be a non-resident alien, you cannot use standard deduction. Or filing a short period tax return. Now those things are rare. I haven't seen a short period tax return in all my career. But you would not be eligible for the standard deduction. Simple as that. Now, special limitations for dependents. Right? The standard deduction is limited for the tax return of a dependent. Okay? So again, these are people that are being claimed as dependent and try and file their own. So the total standard deduction may not exceed the greater of 1,100 or the sum of 350 plus the dependent's earned income up to the basic standard deduction amount of 12,400. Okay, so we definitely have to watch out for these when it's dependent. Again, may not exceed the greater of these two. So we have to give an example because I do know that's kind of confusing. So let's go with this. Special limitations. So example, we have a child model, 8-year-old Pinzer, earned $17,000 in 2020. He's claimed as dependent by his parents. Yay for him. How much is his taxable income? Okay. So, his taxable income is this. We'll have his earned income minus standard deduction equals the taxable income of $4,600. Notice, since it's above the standard, we actually used standard deduction, $12,400. Now, let's take Jeffrey. He's a 4-year-old and is claiming as a dependent by his parents. He earned $6,500 in interest income, so this is passive income, from a large bank account left to him by his grandmother. How much is his taxable income? Well, his taxable income is this. That'll be interest income, since it's passive, minus the standard deduction of 1,100. Okay, taxable income of 5,400. Again, that is a passive income item right there. Okay, or the sum of 350 plus the dependent's earned income. Okay, so it's the greater of the two. Okay, so this is earned income. Interest income is passive. It's not earned. This is why we're using the 1,100 in the last example. Okay. This is why his taxable income is 5,400. Okay. Alright. So that's really what we have to watch out for the standard deduction in this learning objective is the special limitations. Again, we must know if that income is earned or passive. As we saw here, it's not because it was below 12,400. It was because it was passive. Okay? Did they really earn the money? That's the question. Okay? So that would actually conclude this one. Very quick learning objective. So again, if you have any questions or still having trouble understanding this special limitation, let me know. Again, it doesn't hurt to give you more examples.